you guys? Thank you for tuning into my channel where we focus on finance, real estate, and other life topics. If you're new to the channel, please consider subscribing and turning on the notification bell so that you get updates as I'm posting valuable content on a weekly basis. Okay, so today I'm going to discuss the topic of home ownership and when you shouldn't buy a home. Now, most of us, ever since we were young, were told to achieve the ultimate American dream, in addition to a family with the 2.5 kids, that you have to have a home with a white picket fence. Home ownership is seen as a measurement of success in the United States, but the truth of the matter is, guys, that times have changed. And while there are many benefits to home ownership, there are reasons when you should not buy a home. So my goal in this video is to touch on some of the reasons home ownership may not be right for you and when you shouldn't buy a home. Now, please remember, every situation is different. There is really no right choice in this regard. Also, to clarify, when I refer to home ownership and whether you should or shouldn't buy a home, I'm referring to buying a home to live in as your primary residence, to have a roof over your head. I'm not referring to investment or rental properties. So whether or not home ownership is suitable for you really depends on many factors. Ask yourself, how's your financial situation? Are you ready to settle down? Do you really want to buy a house right now? So one reason to not buy is if you have no down payment. In order to buy a home, you have to make a down payment to finance the home purchase, unless you qualify for like a VA loan or one of a few first-time home buyer programs that doesn't require a down payment. Now, your down payment can range from just 3.5% of the sales price for an FHA loan to a minimum of 10% for a conventional loan. Now, keep in mind, guys, the best interest rates are usually given to those who are able to put a 20% down payment and have a high credit score. So for example, on a $300,000 mortgage, your down payment can range from $10,500, which is 3.5%, all the way to $60,000, which would be 20%. Now, if you have bad credit or no credit at all, that may be a reason to wait on purchasing a home. Bad credit can disqualify you from obtaining a mortgage. However, with credit scores below 620, you might be able to find hard money sources or private lending. But keep in mind, those interest rates and fees are most likely going to be through the roof. Also, a higher interest rate means a higher mortgage payment. When it comes to credit score qualification, FHA loans are more forgiving and you can qualify with a 3.5% down payment. A score as low as 580 to 600 might be accepted for an FHA loan. In fact, debt.org indicates that almost 20% of all home buyers have a credit score of less than 600. So bad credit might not eliminate your ability to get a home, but it could be a reason when you shouldn't buy a home until your credit is improved. Now, if you have a high debt ratio, then this can be a reason to postpone home ownership, as this can lead to more stress and anxiety and make qualifying for a mortgage that much more challenging. Lenders change the rules all the time when it comes to debt ratios. Debt to income ratio is the percentage arrived at when you divide your monthly debt payments by your gross income each month. So guys, the magic number in most cases is 43%, meaning you want all of your monthly expenses to be under 43% of your gross income. So you probably can't afford to add a mortgage payment to your monthly debt if your other bills eat up 50% of your gross income every month. Now, lender guidelines have changed since the mortgage crisis of 2007, so your debt ratio will have to be pretty low for you to get through the loan underwriting process. Also, it's important to keep in mind additional costs associated with owning a home. You're responsible for property taxes, insurance, and all the maintenance and repairs. These additional expenses need to be considered when evaluating home ownership. Now, I would say you shouldn't buy a home if you have little or no job security. I mean, with everything that's going on right now in 2020 with this pandemic, now is not a good time to buy a home if you have reason to believe that your job might be in jeopardy. Many homeowners go into foreclosure and end up in that position because they've lost their job. Now, if you happen to become unemployed, you will most likely place a priority on being able to feed yourself, clothe yourself, transportation other than your mortgage payment. This can lead to a cycle of debt and make it much harder to catch up on behind mortgage payments. Now, if rent in your area is way cheaper than owning, especially if it's like 50% or more less expensive, then renting may make more sense. So consider whether it makes more sense to rent rather than buy if your main objective is simply just to put a roof over your head. I mean, to be honest, it can be a bit of a stretch to meet the financial obligations of home ownership when rents in some real estate markets are 50% lower than the average mortgage payment. In those situations, you might be better off renting and paying less to have a roof over your head if prices are so high that very few first-time home buyers can afford to buy their homes. So for example, some places in the South and Midwest, you're able to purchase a house for under $100,000. While in other parts of the country, a median price home could be $500,000. Now, if you're the type of person who wants to be a free spirit, you travel a lot, or you're just constantly moving, buying a home as a primary residence may not be the best decision for you. If you think about it, buying a home is generally a long-term commitment, so you might find that it's difficult to sell your new home in a short period of time if you had to move. And if you did so, you might take a big loss. Now, while it's true you could always rent out your home, if you're always on the go, you have to weigh the pros and cons of being a landlord and if you're comfortable renting your primary home out. It may not be a good decision to purchase a home in a declining real estate market. Now, this can be tricky because the market could be declining for many different reasons. If it's a situation where the job market is unstable and let's say many of the largest employers are leaving, that could be highly problematic. Now, the only way it makes sense to purchase in a falling market is if you're able to buy below the comparable sales. Now, the only thing with that, your predictions could be wrong, and if you're trying to time the real estate market and buy at the bottom, that is a very risky move. Also, there's no guarantee that your property will appreciate under those conditions, although historically, it most likely will appreciate again over time, as time and patience seems to be a key component of success in real estate. Alright guys, so that summarized some things to consider when it comes to home ownership and when you shouldn't buy a home. If you found value in the video, please give it a like, share, and subscribe to the channel, as I am providing valuable content on a weekly basis. Thank you so much for watching, and until next time.